the times we had. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. I see it now, I see it now. Real love, now I'll break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show.
Some days there's no one else who loves me like you used to. Some days I'm not myself, there's no one I can turn to. All the feelings that we shared are in the past. Your relationships are never meant to last. All the feelings that we shared are in the past. Your relationships are never meant to last. It might take some time, but I'll be alright. I'm moving on, I'm moving on. I know times are tough, but I've had enough. I'm moving on.
What's up, guys? How's everybody doing? We're live. Okay. Make sure that the music is turned off. Can everyone hear me loud and clear? Or at least just clear. Let's get the streaming stuff set up on the right side of the screen. Okay. Looks good, looks good. All right. Got a good amount of viewers in here. What's going on, everybody? You guys can hear me nice and clearly, right? Good morning. Oh, what's up, Kilgore? What's going on, buddy? Epic feature on... yeah, that was. I wasn't saying to the Cointelegraph thing. I'm just reading through the comments already. Yeah, so that with Crypto Michael was a pleasure. I really like Crypto Michael. I I always found that Cointelegraph is kind of like tabloidy, out of all the crypto media publications and websites. They kind of remind me of like when you go to a grocery store in the United States, there are these tabloids that have like ridiculous stories on the front of them that just can't possibly be true. It's very sensational, right? So I always found Cointelegraph to be very sensational. But from time to time, I've been interviewed by them. I've been featured in their articles. In the most recent Raoul Pal interview, they used one of my tweets when they were talking to him. I don't have anything against them. Just some of their stuff, they let their writers get a little bit. I think it's. I don't want to say they let them have too much freedom, but some of the stuff they write is it's to get likes, right? Danielle, what's going on? Daniel, excuse me. Pascal, what's going on, buddy? Shroom Toshi, LP, Andre, Jake, what's going on, man? This is where we learn the art of patience. Yeah. Math Max, what's going on, buddy? Julian, Crypto, D. Ross, Carlos Cifuentes, Sigmar, Kel, Satoshi, Jaden, Zim, Jimmy Trendrix. It's been a few videos, Jimmy. I haven't seen you. Popping up in the comments. Victor, my good friend Victor, how are you? David, SG, Kilgore said, what's up? Noxious, Connected. Okay, sound is good. Sound is good. Sweet Canary. All right. Sweet Canary, I really like your avatar. Yeah, I don't know why. I really like it. My wife has turned me into somewhat of a bird person. And not like a crazy bird person, but you spend your entire childhood, your entire life, and birds are just always in the background. And my wife is a big bird person. She could like look at any single bird that is around the barn and tell you exactly what kind of bird it is. And we have a lot of hawks, and we actually have bald eagles as well, which I didn't think was something that you would. I don't know why. I just didn't think it would be something that we would have on this part of Long Island. But yeah, we actually do. And everyone's aware of them because there's only a few, so everyone's always on the lookout for, where's the nest this time? Are there any babies? It's a topic of conversation. Cool. 82 just says sound. 82, we like more than just one word. It works when you add a few more words to make a sentence. Okay, message retracted. All right, cool. Okay, so yeah, so I laughed before. I don't remember what exactly I did, but BTC up or down. Greetings from Nigeria. Olakanori. Ayomakan. Okay, how are you? Welcome from Nigeria. So yeah, we have a lot of viewers in this. This is really nice. And we have a good amount of likes, but we do the whole spiel in the beginning. If you're not already a subscriber, please go ahead and subscribe to the channel. What we try to do is put out non-sensational crypto market analysis. We talk a lot about trading. We talk a lot about investing. It's all specific to the crypto market. Most of it does revolve around Bitcoin, but we do get into DeFi. What we don't like to get into is like the really speculative, even though it's all speculative, right? The garbage. I don't want to be charting things that are 1 million, 1 million market cap coins that have 24-hour volume of, $100,000 or $200,000. It just, by the time that you guys see that, you get into it, it moves another 10%. Someone else gets into it. You have a pump, but it's a really thin pump. And then, God forbid, this stream is becoming a pump and dump. So we try to stick to the majors for a good reason. We believe in them for one, and or at least definitely Bitcoin. So yeah, this is your non-sensational source of crypto market insights and analysis. If you're not familiar with myself, or if you're not familiar with me, this is a time when we need Crypto Cred around because he, that's his area, right? When it comes to the English language. But if you're not familiar with me, my name is Ryan, aka Kennering Clark. My partner and I, we are the co-founders of BlockRoots, and my partner is Josh Rager. You can find us both on Twitter. BlockRoots is it's a knowledge base. So for all things trading, for all things crypto markets, we have a really good platform with a ton of videos. I think we have over 100 hours, over 150 videos on trading. A lot of it is specific to market profile and order flow, so a little bit more specific than what you might be seeing as a new trader. A lot of the stuff is basic indicators. When you come into trading, you're looking at moving averages and the RSI and, you know, patterns, but we get a little bit more into detail with methods that I've used for the last 14 years. So yeah, so that's BlockRoots.com. It is in the it's in the middle of, we're going to be going through a transition where we're going to be porting over the website to a different platform. So we'll keep you up to date with regard to that. But we also have the BlockRoots Market Insights newsletter that goes out. It goes out at least once a week. So it goes out on Tuesdays, back to Tuesdays now, where we share really a ton of setups, get into the specifics when the market is moving kind of sideways, right? But really try to stick to the meat, right? What everyone is really interested in, which is the opportunities that pop up. So we do have a good amount of people in the stream. So greetings. Okay. Who else do we have now? Mr. K, Cornholio, how's it going? Sigmar. So as I, have said many times before, we have a lot of viewers, right? We get a lot of views. We get a lot of new viewers in these videos, but we want to get those likes up because ultimately we want to grow the YouTube channel. And, if we're just being honest, we all have an addiction to dopamine, and the likes are directly connected to that level of happiness. So I'm kidding, but it does help us get prioritized by the YouTube algo. I've actually done something in the stream that I already feel a million times better for doing. So, getting into streaming, you want to have a nice setup. You want to have, everything sort of figured out. I have the, the pre-stream set up with the music and the graphic, and that's cool. But one of the things that's really important is actually lighting. So I wanted to have something that obviously, allowed my face to show up clearly. I use a green screen for the, event that my wife is going to come in, for the, event that my cat is going to walk in, or my nieces or nephew is going to storm in the door, right? I do have, sometimes I will have a background on, but I use the green screen so that I could just fit onto the screen. Now, you're supposed to have a good amount of lighting up the green screen, but you don't actually need that much lighting. And what I've been doing recently is up until today, I've had the lights like blaring on me. Blaring right on my face, and it reminds me of when I played, when I played the league ball with my dad in the summer, and we played night games, and I'll sometimes play left field, I'll sometimes play right field, I'll catch, and I'll be in right field, and at night, on night games, you're looking up at the lights for the ball, and I feel like the entire time that, I'm doing the stream, I have these lights blaring on you, and it feels like almost an interrogation, right? So this is actually so much nicer, just because I don't have those, tractor trailer high beams right on my face. Okay, so good. Oh, this is better light for you guys as well. Good stuff. Okay, yeah. So it's much better. I really enjoy it. Okay, and I think that's that. So get the likes up. We have a nice little like concurrent viewer ratio that we would like to close. We'd like more of those likes, and as soon as we get 50 likes, we'll go ahead and get into it. And we're gonna, I've been talking about organizing the streams better moving forward, and that's what I plan on doing. This stream will not be, I will not be drinking coffee during this stream. I find that if I drink coffee during the stream, I'm always clearing my throat. I think it's just because I like black coffee and it's acidic. I'm not drinking the cold brew, which has, lower acid levels. So I'm always clearing my throat. My throat always gets dry. I find like halfway through the stream, my tongue is like sticking to the top of my mouth. I can't even speak properly. And then not only that, I'm getting hyper during the stream. So for this stream is sponsored by the Bottle of Athletes, which is a, warped Nalgene bottle that is full of a little green tea, apple cider vinegar, honey, and then just filtered water. And I try to drink at least one of these bad boys a day with the apple cider vinegar in it. I drink a few things that might not be up for everybody. I put turmeric, red pepper, and then black pepper on and off. I'll have that throughout the day. A serving of that. The black pepper just helps in terms of bioavailability, making the turmeric easily absorbed. But I will drink one of these, and then I also drink bone broth. So I drink bone broth as well. I'll have a cup of that. And if you can't stand that, just throw a little bread in there, throw a little Parmesan cheese in there, and you have you have a little soup. Okay, Ryan tames both markets and horses. Yes, I do. And my wife is right now, she is taking a new horse on trail that she's going to be doing the hunts with. and that is Flash, and I shared a picture of him. He's a Palomino. Okay, so for dopamine shrooms are better. All right, so we have a good amount of likes. I think we're close enough. Vitamin D3. You have to have vitamin D. I've noticed that there's been periods in my life, and we'll get right onto it after this. But I think it's, if I feel things, it's good for me to share them with you because it probably could help you too. There's been periods in my life where, especially in the fall and the winter, I'm always getting out, right? I'm always, whether or not I am, helping with the horses, whether or not I am, out in between going to the gym. But the truth is, in the winter and the fall, you spend more time inside, right? Outside activities are kind of limited. I love the cold. Okay, I love the fall. I love the winter, but the outside activities are limited. Therefore, your vitamin D is limited. And vitamin D is not something that I don't think you're gonna get it too much in your diet, right? You actually need that. You need that light. So you need that sunlight. So I found there are periods where I would go through like a rut. Not like a rut, like a bad rut, but like what's different right now? Like my energy levels, like I feel kind of, I don't know. I don't feel, energetic, or I don't feel like I have this kind of, so I'm super, I am very, like hyper aware of my emotional and my physical state, hyper vigilant about that. So if something is slightly off, I'm thinking like, what the hell is off? And lo and behold, every time I have the vitamin D, I feel great again because I was missing that, right? I was deficient that from spending so much time trading. So you always have to make sure that you get all of your, vitamins and minerals. Okay, B2 as well, right? Okay, cool. So we have a good amount of likes, and I don't feel like being a like Nazi. So this website right here is Viewbase/funding. There's a bunch of websites that have the funding. So I talk about on Wednesdays. I want to specifically get into crypto. That sounded ridiculous. I want to specifically get into Bitcoin. Bitcoin, lower time frame price action, lower time frame order flow analysis. So we're going to be focusing on, for the most part, we're going to be focusing on market profile. We're going to be focusing on things like CVD, footprint, and what I think are really important positioning tools. So, the Monday stream is going to be like, hey, how's your weekend kind of thing, okay? Where we're going to take a look at, what's taking place in the news, current events, macro environment, shoot the shit like, people do. And then Wednesdays, I really want to get into some of the finer details. Because what I think is there are great streams out there. There are absolutely some phenomenal accounts that are coming from Twitter onto YouTube. I'm seeing it take place. One of my buddies, someone who I think is a phenomenal source of education information, is Crypto Cred. Their stream, if you're subscribed to this one, you should be subscribed to that one, because order flow and market profile, you need price action as well. You need to have that foundation of price action as well. Okay. A lot of my setups, I don't even necessarily sometimes need to look at a footprint. I'll see the strength in price action. And if you don't have that backbone, if you don't have that foundation, well, then you're lacking in something. But, there are a lot of streams where people just get on the stream and it's like, hey guys, what's going on? We're going to run through these charts, and they run through the charts and they throw on a few indicators, and it's the same shit over and over again. It's like, all right, so you're telling me that I don't really need to watch your stream anymore. I could just apply what I learned from the first one moving forward. Like, you don't have anything that you're going to teach me. Nothing's unique. So we want to have a selling point, right? We want to have, I don't want to come on here unless it's exciting, right? And it's not that this stuff is not exciting. It's just, it's not exciting, right? It's not exciting to talk about like XYZ shitcoin that gets cash tagged in the chat. And I look at it and I'm like, this thing is fucking ugly. Or I look at it and I'm thinking, this thing is obvious, man. It's retaking a weekly level. You tag on a position and, you define your risk, and that's that. And that's like what a lot of things are in trading. It's not so much the position. People get way too married to like the ticker, and it's like, okay, what's it doing now? What's it doing now? You have to think about it as, you have multiple edges, multiple, you have hopefully multiple advantages in the market, and you're trying to really put a little bit behind each one of them. And you're not so worried about the one that sets up, on an individual level. You're worried about the aggregate of those that add up. So you never really marry one. So we're never really spending too much time on it. I saw a clip on this, and this is great because this is another guy too I love, and it's his Red, right? He put a clip of his stream. I have to watch his streams because I think he's a great guy as well, but I haven't really had a chance to. But he put a clip up of his stream, and he, I guess, was rolling through tickers really fast. And he was going through them, and he's like, oh, good, And people were like, how are you going through those so fast? Like, you can't, how can you do that? How can you know right away that it's just not good looking? And obviously, he picks up on things visually very quickly because he's been doing this for a long time, right? I could say the same thing for myself. I'm sure every seasoned trader can say that for themselves. And then it's also that there's nothing else behind it, right? It's like, okay, this chart looks good. Okay, tag a position on, define my risk. Next one, right? If I don't have another one, step away from the computer. Wait till your alerts get hit. Wait till you get stopped out. Wait till you get, your alerts get hit. I personally like to put alerts between my stops and my take profits. So I always know, okay, oh shit, we're halfway towards my stop now. Maybe I shouldn't really pay attention because then you might start messing around with things. But I don't know, personally, that's where I have a flaw as a human being. Everyone who's a manual trader they're gonna let their human nature creep into their strategy at some point. Hopefully the really self-destructive aspect doesn't get to rear its ugly head, but you're going to be curious, right? You're going to want to monitor your positions. It's just the way it is. Okay. So trying to be this perfect specimen of a trader is just, it's an idealistic, sort of unrealistic goal to try to attain. So that's how I look at setups, right? I look at a chart and, half the times when you guys give me a cash tag, I'm like, okay, it looks good. Yeah. If you think it looks good, tag a position on, man. Like, don't beat around the bush. Don't sit on the fence. You got to either go all in or back the fuck off of it. Excuse my language, but that's the way it is, right? Either you're going to put a trade on it or you're going to move on to the next, okay? The concept of shit or get off the pot, okay? So there's nothing else to it, right? So in this video, I want to talk about positioning. So we're going to talk about positioning. I'm going to start from the higher time frame because I have to look at things other than the individual footprint on a lower time frame chart to get an idea as to what positioning is on higher time frame structure. So so why have we sort of rolled where we are right now? So we'll look at Bitcoin. Okay, we'll go to the BTC chart. I'm going to be focusing on the Coinbase chart because that's where I want the lead to show up. I think that this is probably the most important exchange right now in terms of price discovery. This, I would say Bybit, obviously, that's the leader of, that's the haven of the apes right now for leverage. And then you have things like Binance, has a totally different type of order flow though. But if we're looking at more local structure, so what has happened? Okay, so what has happened is that the trend has become very obvious, okay? Everyone sees that we're kind of kissing the all-time high. Everyone sees that the, macro environment right now is really lining up in a way that, sometimes things are different, okay? In this period, things look like they're different. Did we get an explosive move through? I don't think that you would qualify this as explosive, right? But it's not a bad move through, all right? I think that we're going to get a really explosive portion of the trend soon, okay? But what has happened is this has become very obvious, all right? We've passed through all the levels that you could say are even levels that are really not that, I didn't really look at these levels thinking they were that relevant. But even in terms of levels to the upside that were not that relevant, we did treat it as support. And we came right into the all-time high, and this is a really, in terms of activity, it's limited in terms of activity. There's really nothing that took place up there. It was a psychological resistance. So everyone knows where this is going, and like anybody, you're going to get greedy when you know that the direction that something is moving. If I see, that a car is traveling at this speed and at this distance, then I could predict where it's going to be in the future, right? Barring any kind of chance variables or random events that can obviously come in to the situation and change the course of that. But we all know, you could extrapolate from this, that prices, I think I could say very confidently that 6 months from now, price is going to be higher. So you're getting people that are looking at this right now as the clear area where a major breakthrough is going to occur. So with this level of certainty, you're getting an increased level of greed where people are saying, I have this much Bitcoin, but how do I get more? How do I increase my exposure? We're starting to see for the first time, in a long time, that funding things like basis, the spot versus futures discount or premium, it's really starting to indicate towards the high that for the first time, the last week and a half, it has been really dominant in terms of in terms of derivative presence. So we have a lot of leveraged exposure towards the high, and it makes sense. People are getting greedy towards the high. They're sort of buying because, hey, it's not really resistance anyway. The trend's going to be up either way in 2 months. Like, let me tag on a long that leverage is irrelevant, but they're using leverage the way that you would hear about leverage in traditional markets. So they're not using leverage thinking about applying leverage onto their initial margin and then making a position that just represents their off-exchange amount for counterparty risk. They're applying leverage on top of money, on top of their account balance and increasing their exposure beyond what they actually have to represent that. So, the derivative product, the purpose of it is, crypto is dangerous. There's counterparty risk. Exchanges get hacked, yada, yada, yada. Being able to use leverage means I could deposit 10% of my BTC to represent my 100%, my entire Bitcoin stack. So what you're seeing is actually people are really adding to what they have, and they're using a lot of leverage, and the market essentially becomes heavy. Okay, the market becomes heavy with leverage products because, again, everyone's sort of anticipating that this break is going to occur. So the one thing that's really good right now is we're having this chop behavior that all I can say is that in my experience, if you're, first of all, the last sort of day and a half has been pretty rough, right? If we look at something like this is a pattern that I've gone over before in BlockRoots roadmaps. So if we just, I'll get rid of these drawings. So you have a clear high, right? You have a clear high, you have 2 tests of it so far. Then you get a move through. It looks like this thing is, onwards and upwards. All-time high is right at this level either way. You get a move through, and then you get a very quick dump. All right, so the first thing you would look at is you have this sort of cluster right here. So where are we looking right away? We're looking, all right, so is the low going to hold again? But instead, you get a tap of the high. So it's sort of like this swing failure. You get a ton of volume that came up here. All right, you had a ton of volume here prior, so there's been this derivative pressure towards the highs, period. But you get a ton of volume up here. The market rips through. Doesn't treat this as support for long, okay, and then moves down another, in this case, like 1K. So right away, there are people that think, okay, immediate continuation. This took the high out, all right, we took the lows out, okay, this is a reversal, swing failure, yada yada yada. This clearly is my chance to get aggressively short and look for lower prices. So we do see this often where it occurs like this, where you'll have that sort of structure that plays out, where you'll have your range, all right, your respect of that range. Okay, finally a breakthrough. Everyone's long. Okay, sorry, OCO orders, trigger, stops trigger. You rip through, don't really spend time there as support, and you break down. And then when traders get trapped down here, you've seen many times this thing has just gone to rip way further in the opposite direction. So you start thinking of this as, what the hell was that? That wasn't resistance, because we just completely did away with it. And really it was just people getting really trapped off sides. So we get that. We get the big reversal, and then I get a complete retracement, right? And then every move that transpired after was a complete retracement, right? So this kind of choppy behavior to me looks like there is just an effort to chop up as many levered longs as possible, all right, until we really start to suck the system dry. Let me put the chat on over there. Until we really suck the system dry in terms of leverage exposure. And last night I shared a setup in BlockRoots where this setup was looking, this is exactly what I said. You have these lows right here. All right, look for multiple moves into this low, because it's an effort to always, when you have a major low within structure, when the market runs into this low, you know what kind of emotional response you create. All right, everyone's fixated on this low. Everyone looks at this low, and more simple traders will look at this low and say, okay, that's going to lead to a breakout. They'll have their systems triggered around that. And then what we look for is, in this case, last night I said that the trigger was 18.8. So what I was looking for was right here, which we ended up getting. So you get the aggressive move into the pocket, you get a good amount of volume there, and then a sign of strength is your reclaim of previous structure on the way down. So this is exactly what we said last night in the market update on BlockRoots, and the target was 19.3, 19.4. And the idea is you keep making aggressive moves into the low because you're trying to, one, liquidate positions so that they're involuntarily taken out of position, meaning they don't get a choice, right? The liquidation value is what it is unless they add more margin to that. Or you force them out, right? You get them to say, oh shit, it's dumping. I'm getting out of my position, to puke their position. So we do this enough, and we shake out a good amount of those leveraged longs. And ideally, you get a flattening of this. Funding. So across the board, what we've actually seen is that funding was positive for a while, and funding positive is just a sign of increased long exposure on these derivative products. Okay, in a bullish market, who doesn't want increased exposure? So that being said, who wants to step in front of a long when the market is clearly a long in that moment? Well, you have to incentivize them, right? You have to pay them some sort of interest rate component. So we saw that this was 17 basis points, 20 basis points, 10 basis points. And that's considerable if you're using a small amount of margin and a lot of leverage, because that's going to eat into that position. You could actually liquidate it, right? Through a few funding periods, you could completely liquidate your initial margin, or the margin you're using to control your position, your maintenance margin. So right now we've actually seen that, okay, that is being accomplished. These are all neutral again, right? So if they're neutral, if they're going back to even negative, and this is the premium index, this is a derivative of basis. So this is what goes into the actual funding mechanism. So this is a really good sign. The fact that this is really flattening out is the sign that I would say is adequate evidence that these derivative longs are being shaken out. Because what happened is, essentially, just think about it like this. Spot was there for this entire move up. Okay, spot stepped off the gas up here. What you saw was the rest was carried by derivatives products. And if you think of the market now, and if it's a spot-led market, consider spot as fair value, right? So when you move away from fair value, you're eventually going to come back to the average, right? You're going to be oscillating around that average. So I've said this before, using if you're looking at a trend, it might be moving upward over time, but it's going to be doing this, right? It's going to be moving around the average. So consider that spot is essentially your fair value. So when you start to see that the derivatives get really detached, what you need is that sort of unwind, right? So this is positioning on the higher time frame. We see a ton of positioning that gets increased towards the high. So where is most of the activity come in? It's come in towards the high. We could look at something like, I'll put on the TPO chart to make this a little bit easier, just to look at something like the volume profile. So we see that at the highs, we have the point of control up here. All right, so point of control right here for yesterday. All right, so this is this is about to close out, but this is where most of the volume came in, so towards the highs. All right, again, getting very, in this case, exposed with leverage products. So this is on the futures exchange. So we see that now it's starting to actually compress again. So that's a really good sign. Okay, so this is the first thing I want to look for, right? So to make sure that one, and you could do this by observation, right? You could look at something like Coinbase, something like, Gemini, something like, any FTX spot, and then look at all of the other futures prices as well. And in the pullbacks, right? So one thing that you want to see is in the pullbacks, who is taking the lead, right? Are we seeing that in these pullbacks, all right, into these moves into the low, are we seeing that futures are trading at a premium or a discount to spot? The best case scenario, which actually yields this sort of declining premium index, is when you're seeing that actually the futures are starting to now get at least in line with the spot, or maybe best case scenario are trading at a discount to spot. Because what we ultimately want to do in these structures, all right, as we continuously put in, interim tops and then have these periods of consolidation, what you want to do, or what you want to occur, is you want actually people to become very doubtful. You want them to bet that, oh no, wait, this is actually going to, this is turning into a reversal. Okay, so where better to define a position than, at the high of it? I'm going to get a short on here and step away from the computer for a month. So when you start to see that the futures are trading at a discount to spot, that's just another sign that that is occurring. And that'd be great, right? It would be great if not only we had the spot demand that carried us up, but as the spot was raising the price, those shorts had to close out, right? And if they aggressively close out, you get those squeezes. So another thing that's worth pointing out is that, I said this yesterday. I said not all absorption leads to reversal, okay? But almost all reversals have some sign of absorption. And I got a few comments on Twitter like, oh, so up or down? I'm thinking, no, jackass. That's not even the same, okay? And someone said, I think it was Sean talking about a square and a rhombus, and I've used that reference before. But this is important, okay? This is not, just an up or down case, because the truth is, in all of these structures, we really haven't had absorption at the highs, right? And that's one thing that I would want to be looking for to say, oh, wait a second. We're actually, running into a wall right here. Okay, we're actually running into a heavier hand in this case, which is, it's not the buyers, right? It's the passive sellers above. So at the highs, Okay, one thing that we would want to look for is, we have what we have in this case, as I said, is we have too much leverage at the highs, right? So you have this delta unwind that occurs. It's not the market getting absorbed though, right? So as the market's moving up, as we even put in these equal highs, what we're not seeing is that delta is putting in higher highs. So cumulative volume delta, we're not seeing that we have any kind of, no real obvious absorption at the high. It's not like someone's stepping in front of this and they're the stronger entity, okay? It's not like we had that over here, right? If we look at BitMEX, this is BitMEX. If we look at Bybit, it's the same thing, right? So if I zoom out on Bybit, it's the same case, right? Basically the same case. Okay, we have over here, we have just complete unwind. So you see that OI drop, but there's no signs other than, finally it looks like some of those longs are beginning to unwind, and you have delta that's actually moving downward. You have over here, you have equal highs in delta. There's no sign that someone is catching this, like with a mitt, like come to me buyers. Like I'm happy to take all of this aggressiveness. There's no sign of that. All that we have is, again, a market that is being built like this right now. When you have a tree, the tree should be built like this, right? Some tree, any tree. This looks like a Christmas tree, right? Now I have 3 of them. Obviously, you want to see that the base is where most of the strength is, right? You want to have a thick base, okay? You're not going to build a structure unless you're one of those gym bros that doesn't do legs. You don't want to just build all chest. You don't want to look like a martini glass. So a structure that is built with most of the volume at the high. So if you were to look at this profile and you see most of the volume is at the high, and we're trading right here, that's not good, right? If we assume 1-for-1 activity at this high, then if we just assume equal longs and shorts, which is obviously not the case in terms of aggression, who's better off if price is right here? Well, it's any shorts that got involved here. They're not in trouble. Whereas longs, if they're still in position here, they haven't puked yet. If they're still, overexposed here and they haven't gotten out because they're forced out yet, if price moves further away from that point and continues to track downward, then you still could have a further unwind to have to deal with, and you have this delta unwind where the market just gets a little bit too exposed at the highs, and it loses the momentum to carry it any further. And this goes to the question of, where's the market trying to go? Is it doing a good job of getting there? So the entire time the market is doing a good job of getting to where it's trying to go. We know it's trying to go upward. This is the first time where it's not doing a good job of getting there, okay? Where it is getting overexposed. The question is, who is in control? Well, buyers have been in control. It's not that in this case, there's something you could distinguish here again. Sellers are not in control up here. It's just that buyers are now getting offsides. So buyers come in aggressively. They get offsides, right? And the best thing that you can do if you're looking to take advantage of this is to identify, hey, where are their pain points, right? Where are they getting it wrong, right? If most of the volume comes in at the high, and I see that we're trading below that, okay, then I have a little bit more of a trigger than just a price action trigger. I know that, hey, there's 20 million contracts that opened up above me. We're 50 ticks below that now. They're screwed, right? They're probably going to puke their position. I'm going to tag on a short because of that. And a lot of my short-term alpha comes from things like this. So I saw 7 million come in on Bybit, and I'm thinking, you just messed us up, man. Like I saw 7 million come in, lifting the offer all at once, and we didn't track higher. And I'm thinking, okay, this guy's going to puke. There's no way he's not going to puke. And sure enough, you get a really big response once price moves far enough away from that positioning. So the good thing is, again, we don't have any kind of offsides positioning, right? Excuse me, we do have offsides positioning. We don't have any absorption at the highs. So this is a case where, like I said, reversals normally do have signs of absorption. A reversal, we're normally going to see, all right, so if this is, 1-for-1 up here in price action, relatively equal highs, this is relatively equal highs. Well, in delta, you would want to see that this was doing something along the lines of this, right? So you have a higher high, you have a little bit of higher high, and you have more aggressiveness, but there's less, for more work, there's less activity that is showing up on the chart. And then another thing that you want to see is that the open interest is increasing with that, because you don't want to see that you might want to see this if you're bullish, right? But if you are looking for the signs of reversal and you're trying to take the other side, what you want to see is that you have absorption, and that in this absorption, so let's say we had absorption right here, so price actions equal highs, cumulative volume delta, all right, right over here, equal highs. If we had cumulative volume delta, and I'll change the ink to make it look like it's the actual CVD, if we had CVD do something like this, and price action was equal, the sign that that's a good trade to take would need to be it would need to be validated by an increase in open interest. So you did get the increase over here. So you did get a ton of volume. Like I said, that was new business, because what you want for a squeeze in the opposite direction, or to make a case for that, for someone being off sides, is to know that, hey, it's not buyers that are closing out from shorts covering, because that's closing out business. It's actually someone that is getting off sides because it's new business opening up, right? Open interest increasing means there's new business opening up. If you don't have new business, you don't really have a strong argument for, something like a swing failure. You don't have something like a trap trader setup. Swing failure setup, what it is, if we go down to something like this, so look at this on the low time frame. We'll just leave it on this time frame because I could still sort of get the idea across, even though this is not what I'd be looking at. Swing failure setup. When you're looking at a failure swing, or a swing failure setup, however you want to say it, ultimately what you have is you have a high, right? So look at how these candles are set up to begin with. This is, and I've said, is getting overweight at the high. You have candle bodies right here, but look at where most of the volume is. So here's the candle body. All of the volume is above it in the wick. So that's just one of the first signs that someone is getting caught off sides at the high, right? You maintain that structure and you move away from it enough, you're going to get them to puke. Okay, if that is enough of new business that is open. But a swing failure a lot of the times is you have a setup. Okay, in this case, you have the high right here. Towards that high, you get another pocket of aggressiveness. All right, and your setup occurs when the best case would be when you're above it and you see a ton of volume coming above that level, but then what do? You trade back below. So, price action is really good for a swing failure when you have something like this, important low, and you break it and then you retake it, and that's your swing failure pattern. But the actual truth is that is built around, or why that works is because what comes in over here is new business opening up in anticipation of a continuation down. So you see a ton of volume come into that low. So the price action that preceded it from left to right might be, average contracts traded 5 million per candle. And then you see this breakdown occur into that low, through that low, and it's like 30 million. Okay, then you have a case to be made for, there was a ton of a participation that came through that level, and for that participation, now the market is reversing, and they're going to have to puke their position. So this is, we haven't had signs of absorption yet. We're just losing this very short-term losses of momentum and getting heavy, right? Getting overexposed with derivatives. So that's what I think right now. I think we're just going to have to shake these people out. Right? We have to make them incur enough pain to where they say, all right, I'm cool, man. I'll just ride the spot. Sorry, right? I'm happy enough with my spot. Or it is what it is. Someone will get lucky, right? But it's after, you don't want to be the first. You don't want to be the first on the beach at this level, okay? You're just going to be a bullet sponge. You are the cannon fodder. So I think that now, right, so we'll look at my levels that I have, and a lot of this is just intermediate levels right now because there's nothing to look at right here that's close by that I think is worth prioritizing or having on the chart. Like, I could keep these levels on, but they're not in terms of proximity, they're not really that relevant right now. If we start to make our way down there, I'll put them back on, but I have my intraday levels that are my larger levels, and then I have my own levels that are derived through a few different things that are not, I don't have on the trading view chart. They're more based on where activity came into the market. So we have these levels right here. If you're looking at this structure, just a little lesson, right? If you're looking at this structure and you're thinking, they're all wrong, this is a great short, okay? This is a great short, Ryan. You don't understand. I listen to your streams. You say that context matters, and contextually, this is the best area to define a really awesome short because my short's invalidated right here, okay? This is the weekly target for my short. That's huge. Let's put on the risk reward for this. Let's do the paid group thing. And where is this? So short position. Here's the short position. I could give myself a liberal stop, right? Or even a stop just above that high. And I have a move that is, we go down to the wick. We imagine things get front run. I'm looking at, a trade that's 9-1, right? This is amazing. I'm taking it. My position is easily defined. What are you talking about? Well, it's actually not, okay? So there's really nothing that occurred back here. That level is not the same as defining a short back here. Many times in the back here, the first move into this level, I was like, I'm taking this short, guys, because this is contextually a great area to do it. If we're back above there treating that as support, that is invalidated. Here, maybe it's invalidated, moves up. I think you move up through this level now. We'll get down to lower time frame levels in a second. I think it's going up, right? I think it's ripping up at this point. But you know, if I'm looking at this and saying that I could define a position there because my stop is able to be put close, you could. The idea of putting your stop is a, you know, theoretically, your stop is the risk you're defining, right? But condition wise, is your stop exiting you from that position where you intend on it exiting you? So if I say, all right, guys, my stop's at 20K. All right, we're above 20K. You know, it's clearly going up. My stop's close. You know, this is a great position. Okay, so you place your stop at 20K, right? Now, everyone right now is, we know what happens if price moves up. I think at this point, you're going to get a squeeze. You're going to get a big squeeze, and it's going to be a FOMO squeeze. It doesn't need to be a derivative-driven squeeze. You're going to get a FOMO squeeze, right? Oh my God, Bitcoin's moving again. I didn't buy it, all right? So when your stop gets hit, it might be defined for 2%, but your stop gets filled from, you know, you place your stop at 20 in good conditions, in a thick condition, right? So these are not thick conditions. These were thicker conditions. With a thicker book, okay, you have more relative liquidity to the current market price to absorb any of that activity. Up here, the ask, the offer, it just disappears, right? So when your stop triggers at 20K, it gets executed at, let's just throw a hyperbole out there, it gets executed at 2,500, right? So 20,500. So now your stop has slipped. You know, you defined your risk 1%, your stop has slipped 3%, right? This is not out of the question, by the way. You know, that book can evaporate. If no one's willing to sell, there's no orders for your order to hit into. You know, your cover for your short can buy all the way up to the next order, which that could be anywhere. That could be where the next offer is, right? Now you imagine there's going to be liquidity near price based on just market makers, but even at that point, during these highly volatile moves, there's not an incentive for a market maker to step in front of that. That's just complete flow toxicity at that point. Why do I want to provide an offer if I think I'm going to get run over and I'm not going to be able to hedge it fast enough, right? Even if, and a lot of market makers are even not the ones that are contracted, but there's a lot of like hobbyist market makers that are not even delta hedging immediately. So you're just having less of an inclination to step in front of that period, right? So your position is not as easily defined. It sounds better on paper, but it's not in reality. So looking at this in terms of more recent price action, and then I'll look at all the questions, guys. So I promise I will look at all the questions. So I have a few levels that are defined, and we could go to EXO because I'm focusing a lot on EXO now. I think that you have to. You know, it is what it is. I love Sierra. I have to keep Sierra for CME because I think CME is going to take the lead. So absolutely. But in terms of all the other exchanges, which do help in terms of price discovery, and that are very helpful for order flow, right, or necessary, right? EXO is just it's adding all the exchanges. They have a desktop client, which I can't wait for, and if they offer a trading connection, that would be just phenomenal. I think everyone wants to go there, right? I know the creator of EXO probably wants to do that. It's just, this is a lot of work, okay? So everyone has to be patient with people that are creating these fantastic products. So if we're looking at more local structure, things that stand out to me, just clearly, the high that we put in terms of our closing value, we'll keep it pink, how about that? High that we put in terms of our closing value, we have a poor high right here. So this is you know, the concept of looking at market profile, you get an idea of context. So I can see exactly what kind of condition the market is in. But a really good thing about it is immediately I see where is the market being accepted, where is it being rejected, okay? So a rejection looks something like this, all right? This is an area where the market came in and it was like, no, we're getting out of there, buying tail. Okay, so that excess at the bottom is an indication of a buying tail, or rather just presence, and price was not accepted there for long. TPO is based on time, right? In the past, TPO was thought to be volume because before volume was reconciled at, you know, during the day or by the second, it was reconciled at the end of the day. So yesterday's setup that I mentioned in BlockRoots, the idea behind it was if you move into this level, a swift response out of here should be seen because previously this was the you shall not pass point. So you don't want to see that you come into this level and gain acceptance. That's a bad sign. That means that buyer is not really as present there. So the fact that we zipped out of there and came back up above 18.8, that was perfect for the setup. But we're seeing right away where is the market being accepted. So if you look at this profile right here, it's semi-symmetrical, right? Semi-balanced. Okay, a lot of these profiles are really, there's a lot of dispersion lately. There's a lot of volatility. So out of this though, the tail is better than the high. The low is better than the high. You have a poor high. So this says that the market came into this for a period of time and was not cleanly rejected. It didn't find a seller. Now, mind you, we are within a prior profile. So this is way more important when you're above in sort of newfound territory. You walked up, you created this sort of blunt top, right? You have a profile that looks like that, and that means that if you moved down from that, it was just a loss of momentum, right? So maybe price came up like this within it, and it did this, and it just rolled over. And you're looking for this as either a stop hunt target or a target to revisit and see a breakout occur from. But in this current context, we've come down to the low and we've found buyers. The only absorption that we have has actually been at the lows. It hasn't been at the highs. So that's exactly what you want to see. You want to see all of that selling behavior. You want to see that someone knows that someone is an informed trader at that point, that someone knows that this thing has a direction with conviction and that is upward. So if I look at this, if I could just put why did this not, I can't use my hotkeys all of a sudden. 1 second. If we actually look at these lows right down here, so mind you, these are the levels I have marked on the TradingView chart, so I'm going to talk about them on TradingView in a second. But if we look at these lows, so we look at, I have the 30-minute delta chart. So if we look at this, you could actually see that into these lows, there was no absorption at the highs, but guess what? Right, we have actual absorption at the lows. So I'm just going to scale this a little differently. But what you can see is into this move from left to right translation, right, you have more selling activity. Okay, you have more selling activity. All right, so more in terms of the cumulative volume delta is continuing downward, but price action is actually continuing upward. So that means that someone is absorbing that increased selling activity. There's more effort that came into this on this side than on this side, yet price is actually able to hold up a little bit better. And if we go to BitMEX, this is BitMEX. If we go to Bybit, excuse me, I guess this is the template is saved. I didn't fix that. If we go to Bybit, same exact thing. Now the thing about Bybit, and this is important, so know your exchanges. Bybit has that CVD divergence, okay, and Bybit has a more substantial increase in open interest. So there are traders that are getting caught now, betting on the trend moving further down. They're selling aggressively, and that's actually what you would want to see. You want to see that build up. So we have a few levels, right? We know that actually, if we look at the TPO chart, that price is not being accepted at the low, right? But it is being accepted more at the high more recently. So this is all good, right? This is exactly what we want to see. This is, we have new business opening up. We have trap traders maybe at the lows. And just from this setup alone, if I'm looking at potential ideas for short-term trades, my short-term trade idea last night was a break anywhere between this low and these lows prior that was reclaimed and traded back over 18.8. So the idea was simple. It was, all right, you reclaim this high within the structure and the progress downward after making an aggressive move into the low, trap traders down there, and upward progress to me just means we tap out at this low over here again. If we're moving forward, I don't think you're getting many chances to sell this high again with this kind of result. I think that this poor high is a target. So if we start to base out over here, that is starting to look great, because if you just look at the lows of the structure prior, right, we're not getting the best case, which is trading above this level and treating it as support. So best case is the highest support. Instead, we're actually coming back down a little bit further, but that's fine. I'm not taking this trade right here. If we do something that is more along the lines, and you can go off of price levels if you want instead of the poor high, do something that is like this. I anticipate that since that would mean this would be a gross high, right? We would have a really flat top, that this is going to skate upward. I think that if you get a close through 19.3, 19.4 on a half-hour chart even, or on an hourly, I think that you're going to get a move up to this highest daily close that we put in, which is right around 19.7. That is conservative speaking. That is one level to the next. But in terms of context, which is the first most important thing with regards to trading, in this current context, do we think that after multiple taps of the high, and that's just within within this chart window, do we think that after we're testing this that we're again stopping there? Maybe you take profit here, look for a retest of this 19.4, but I think that you just get that much closer to a major breakout. So I think you get that much closer to the break that takes us to 21, 22, something like that. So hopefully that was not too much, guys. Try to keep it specific to order flow though and market profile, and give you guys a little bit of that. And let's see, you got some stuff in the chat. Let me pop this open. Pop out chat. Okay. Imagine if I looked at this and someone was saying, "Oh my God, your sound went." Oh my God. You hear a window crash in the background, I'd jump out. What charting software do you use for market profile? So I use Sierra and I use EXO. Okay, so I've gone over this. I really love Sierra. I've been using Sierra forever. I really love Sierra. I'm keeping Sierra now. So Sierra has no other integrations besides BitMEX and Bitstamp for crypto. I think that those are the only ones, and Deribit might not even be working anymore. But I have to keep Sierra for the CME because the CME is going to take over in terms of the lead for open interest. I think in terms of the crypto assets, Bitcoin. It's all Bitcoin. So I think CME is going to take the lead this year. So you have to look at flow that's taking place on CME. So I use Sierra, right? So if you're looking at this platform right here, this is Sierra charts. This is connected to the CME. You have to pay a pretty hefty fee to use this. But for a lot of the charting, I'm going to be moving outside of keeping an eye on the CME. I'm going to be doing most of the crypto native analysis off of EXO, which I used in the past. Whenever they were coming up, I was trying to like promote their product. I wasn't doing this as a partner or anything. I just thought it was a really great product, and there was, when I first came into crypto, I didn't have these tools, right? I wasn't able to take the tools I used in traditional markets, trading equity derivatives and trading crude oil. There were like these private platforms that were only available if you were in, honestly, I didn't use a VPN in the beginning of trading crypto, so I couldn't access these things because they were like Russian products that wouldn't work on my computer. I couldn't download them. I don't remember, honestly. There was a bunch of products that were kind of sketchy, but there was really no major integrations like we're seeing now with market profile and these footprint tools with crypto. So, sure, lo and behold, when this came out, I was thinking, that's awesome. Now everyone can start doing this. So I use EXO charts. All right. This is the setup I have for EXO. I cleaned it up this morning. I have my lower time frame trend reversal scalp chart. All right. So this is actually saved on the wrong setting now. That's a volume-based chart. So based on 5 million contracts traded. So each candle is off 5 million. This is a trend reversal chart. It's a 32-20. What I changed this morning, which is awesome that they added this. This is sick. Trades per second. So in something like a trap trader setup, the trades per second thing is something that is really going to come in handy. Okay, this is not the perfect example right here, but this is a trap trader setup period. So you have a trend reversal candle setting. So it's going to eliminate all the noise that occurs with time-based candle. You have a range that forms. You finally get a break through that range. That range break occurs on an increase in trades, and at the low, we have an increase in that negative delta. So you have trap traders down at the low. It's not the most beautiful looking setup, right? This is not the best case. Ultimately, I would want to see, back-to-back increase in trades per second, increased activity, increased negative delta, and then once you reclaim this level, it's onwards and upwards. But I use the TR chart, right? So 32-20, 78-48. I've also used the 24-14. I use the volume-based periodicities, and then we go to the next one, which is, let's see, so we're on, I have to read, for some reason, so EXO's great, but sometimes it's not, it doesn't move as fast as Sierra. It's smooth, right? It's weird though, but like I can't, right now, my hotkeys are like working on and off. Then I have a 30-minute chart. It's based on time. I look at the open interest and the delta, just CVD as a whole. This is my zoomed out view. I'll toggle on and off with this and a volume-based one. So I'll look at a, not that one. I was just changing my settings around, but I'll look at something like a 50 million volume setting. So again, it's not based on time. It's based on volume. So these candles right here, they're all printed off of 50 million contracts traded. So the benefit is, no activity, no candle. Okay, so this gives me really good levels to go off of. Very clean. If you look at a time-based chart, you just print a candle based on time passing. So there's many times when you're left with those shitty candles that there's nothing that took place there. I don't want to know about it. I want to know where activity came into the market. So EXO is a phenomenal platform. So where's the chat? Oh, here it is. So is there a good tool for spot driven versus derivative price action? Well, one thing that I look at is I'll just look at the actual exchanges. So let's put this up now. Crypto Watch. All right, let's open this. Okay, hold on one sec. Here we go. And I'll look at all the exchanges that are relevant. So I'll look at, this is, we're looking at Coinbase, BitMEX, FTX Perps, FTX Spot, and then there's usually one other, but I lowered this down the other day so I could put it on a video too without squishing it too much. But I'll have this open, you know, I have like a 49-inch or 50-inch, whatever it is, screen, and I'll just open this entire thing and pay attention to the actual, it's not a matter of just seeing it once in a while, right? Oh, the spot is temporarily trading $1 over the futures. No, at these price levels, it needs to be more substantial. So I need to see that consistently into the lows that spot is trading at a premium, right? A sign that the futures are getting ahead of themselves was, you know, one of the things that I was seeing was, oh, wow, we are still getting a lot of volume coming in on this chart on Bybit, but it's not occurring on Coinbase, right? The activity is not showing up on the tape for Coinbase, but it's coming through with millions of contracts bought on Bybit. You know, you could look at that. You could also look at the premium index. This is off of BitMEX, but it's the same sort of relationship as other exchanges, right? So we're seeing that there is exchange fragmentation, but the derivatives platforms kind of move similar, right? And the spot kind of moves similar enough to where you could kind of look at, you know, you could look at Coinbase as another premium index indicator as well. You could look at that in BitMEX. You could look at that in FTX to see how wide this spread is getting. Just look at the prices, right? Keep an eye on the actual price feeds, and you could accomplish that as well. I'm sure there's indicators out there that are specific at this. Okay. 2 parrots in the living room. They're not in the background. Nice. 516 or 631. Man, don't try to dox me. Fairview. Okay. Let's see. Greetings from France. All right, so Josh joining a live stream. You know, I don't know how to do 2 at the same time for one of these live streams without it getting kind of messy, so we'll see. All right, okay, yummy cup of bone broth. All right, so let me just, straightforward talk always. That's the way it is, D Ross. Low fee using credit card, nowhere, JMax. That is the highway robbery that occurs when you buy crypto with a credit card. They charge you like exorbitant fees. It's disgusting. But it's like, hey, you want to get crypto, you got to pay. Is there a good free tool determining spot? Okay, got that already. Just got here. Cool. Uni about to see if it could flip. So Uni I'm kind of done with until it has really strong activity. Yeah, the video will be available again. Okay. Great talk. Okay. Can I DM Twitter for the TPLT? Not sure what that says, Zoo, but you could always DM me. The API for Binance sucks too. Yeah, so yeah, that's a problem. Like the one thing about these is I've noticed, and you know, what you're talking about is different, but you know, I know you're talking about API connection Binance, but I've noticed on some of the new platforms, like I was using Quant Tower for a little bit, and like the API wouldn't connect to some exchanges. I was using their ladders to observe all this, and I just went with Crypto Watch because it's awesome. But yeah, I hear you, Kilgore. You talked about thicker consolidation area. So thicker area, CVD is one thing that helps you see that. So if anyone wants to learn a little bit more about CVD, we go over that in BlockRoots. Huge squeeze towards all-time highs and slow price degree. So Abraham, I honestly don't think that it's worth thinking about 12K right now. So here's the thing that everyone leaves out that's the most important thing in trading, period. You can't just look at a chart and say that, you know, if this, then that, right? You know, oh, this chart is, you know, structurally it's a trend that's making higher highs and higher lows, and there is a lot of times you could apply similar ideas towards the 5-minute chart as you can to the daily. So, in that being said, every other time we've had clean retests, so we're coming back down here at least, because this is a trending move and it always comes back down and tests. That completely acts like the market moves in that binary if this then that fashion, you know, very deterministic. That's not the case, okay? It is a completely different context now. This is a really strong trend with a different bid. There's an institutional bid that we have institutions TWAPing in. That means that they think it is so important to get crypto fast that they don't want to use a limit because they know they'll advertise their presence. They can't just throw a limit order on, All right, they can't mark it in all at once because then they'll create a tremendous amount of slippage. But what they're willing to do is to buy at market with a time-weighted average price, right? So buy using a TWAP. So they're buying the same amount, let's say, every 5 minutes, okay? And hopefully over time they'll get a good average price. But that's how important they think it is to acquire this. So you're dealing with that person in the market now. I've talked about this concept before. And a lot of times I talk about these concepts. Make no mistake, I'm a student, right? My entire life has been a student. I didn't learn market profile by being born, okay? I learned market profile by being introduced to it by a commodity trader, okay? Someone that I look up to, okay? My grandfather was a big guy in the commodity space. I didn't learn market profile from my grandfather, but a guy who I reference all the time is James Dalton, okay? And like he says, that other time frame participant, when you break a major level of market structure, you bring in different participants. Now we've broken all of the important ones. We've signaled to the entire world that crypto is no longer a bubble. Even Stanley Druckenmiller is talking about it, and that guy is a technical trader. The guy is a technical trader still, right, who might get mocked for it, for still listening or paying attention to TA, but he thinks it's clear, and I think it's clear too. Hey, you know, something major has changed. So once you break major levels, you know, your big players can't get involved on the low time frames. They get involved during major changes like this. So they're thinking the trend is changing. I've seen this move before. Maybe I want to get involved with that much more of a sense of urgency. Okay, so you might not get this retest, right? You're seeing that things are getting bid up by spot, not by, it is a spot driven market. So to think, okay, you know, the textbook approach or the academic approach to this is that you retest the support once you flip it. That's not the way it works when there's a completely different context. There's a sense of urgency right now to pick up Bitcoin. There's a sense of urgency to hold it at this point, right? It's not even to trade it and to take, everyone is holding it now, okay? So don't hang on to that 12K retest. I acknowledge that those levels are there, but that's all, right? I acknowledge they're there. But guess what? I'm not thinking about 12K until 15K. Makes sense, right? Why would I think about 12K until 15K? If we get down to 12K right now, we're all fucked anyway, right? If it happens in an instant, if I don't have time to think about 15K before 12K hits, you know what? It is what it is, right? It's a market. You know, you have to expect that there's always going to be those crazy standard deviation like events. But that's not what I'm prioritizing at the front of my brain, right? You have to put things in order at some point when you're trading. You have to say, okay, I have all this information. How the hell am I going to order this? All right. So I see a lot of new traders lately, and I see a lot of new traders with market profile and order flow, and like they're also like teaching other traders now, which is kind of crazy. But I you know, I'm coming from someone who's been doing this for 14 years. Okay. So I see like this thirst for tools and information, the shiniest new tool and trick, and the problem is that's more stuff to focus on. I say my trades are based on 3 to 4 details, sometimes just 3. 70% of them I say go with 3 of those details being on the money, and you know, the remainder, it's great when I have the 4 that line up. That's when I'm going to get heavier, right? The less I have in terms of confirming my trade, the more it'll become like a 1% trade, one of those generic trades. I'm just risking 1% of my account. But you can't do that with every trade, right? Because at some point you're not saying much about the hand you hold if you're only going to risk the same amount, no matter what. You know, not taking that condition into account. So when it comes to how I prioritize things, it's with levels also, right? I'm not thinking, you know, of course 6K is a level too, but it doesn't pay me to think about it right now. It certainly shouldn't be a priority. So I can't even. I can only laugh at things when people say 10K and 12K. It's like, yeah, cool, man. We all know they're lying on a chart, but it's deal with what's in front of you right now. Okay. So you're playing football. It's like the quote from Any Given Sunday, the 6 inches in front of your face, right? If you're a lineman, are you thinking about what I'm going to do 60 yards down the line when, you know, my fullback, my running back has blown through the defense wall? No, you're thinking about the guy right in front of you and then the guy right after him and controlling your area, right? And that's how I think about trading. My long-term trades, I put them on in the optimal areas where I get the setups, but my trading attention it's probably always $1,000 window, and that's a lot, right? It's more like a $200 window, honestly. Most of the trades I take I don't always talk about, but they're little scalps that might not seem like they're worth a lot to you, but I take 60 of them and I have, you know, a lot to show for it, and it's worth it to me. Scene. So I didn't mention any scene. I didn't mention scene. Josh might have. So yeah, good movie. Yes, great movie. Carlos, that locker scene, man. That is a. I like you, Carlos. I like you because I like saying your name, Carlos Cifuentes. But it is it's a really good movie. That locker room scene where he talks about that, he goes on that whole monologue. It's fantastic. You know how that's analogous to life or a metaphor for life. Just great. So yeah, so let's look at some charts. I have a few that I want to get to. Sushi was looking great, right? I shared this the other day. Sushi basically just retaking previous levels to the upside. You have this sort of loose trend reversal that was taking place, but this right here specifically was kind of the nail in the coffin for the long setup for me. So you have, one thing that I look for with alts is just retake your weekly structure first. So if we look at this first on the weekly, all right, so retaking weekly candles, there's no real big weekly dip here. You could say that is it, but a lot of times the alts we're looking at have so much price history that you get a weekly dip, right? You get a weekly swing that you're dealing with, you're coming back to. But sushi, right? You're looking at sushi, and this is probably just not the longest chart, right? It probably has one at some point. Looking at sushi, okay, major area of support that we have more recently, all right? Looks like continuation down. You capture a bunch of aggressive activity into the low, and then whoops, V-shape reversal to the high. So the great sign is when you start, or a great sign is when you start treating the top side of the structures on the way down as support, and you don't violate them too much. So you don't go into the prior range. You kind of continue to respect the highs. So now we're actually, at this point we were back above, and I wasn't interested in this until I scanned through it the other day. I shared it on Cointelegraph yesterday. I said, this is one thing I'm in, and I got laughs in the comments. And I'm like, 56% later with this trade, you could kiss my ass. So I closed it out. So I closed it out just before. But retaking previous levels like this is just money, right? So you put in a swing low on the daily. You violate it, but again, you have a higher low. You have a higher high. Violation in an alt, not that big of a deal, right? You don't close below it. It's not that big of a deal because it's loose, though, right? It's thin. You're going to get violation. You're not going to get levels that are acting like they're levels in a fucking treasury market, okay, or some market that's thick. This is an altcoin, right? It's a shit coin. So I think it has viral-like nature to it, though. I could see sushi becoming a doge on tick. That's all it takes, guys. It's a thin asset, right? In the beginning, for those big moves, it goes on TikTok. People are like, who doesn't love sushi? Sushi's up 200%, the next week. So this, to me, was a trigger, though. So once we reclaim this and it became less messy right here, I'm like, all right, so I've seen this pattern before. We do this with Wi-Fi. We're doing this with everything else. Everything has strength. Just it's a buy-dip market. So longing that, I think that right now, this is your higher time frame resistance that we're at. So I ultimately would want to see something that kind of floats back down to 180 level. Looking at some type of response up here, I could, be out of the trade early and we nuke up higher. But at this point, I want to be buying dips and not trying to sell the high. That's the one of the better pieces of advice I could give you is like, I'm not trying to, and take this and apply it to yourself, right? I'm not trying to sell highs. I'm trying to buy dips and capture 60% of the move and then rotate, right? Rotate. Just targets are popping up everywhere, okay? I'm not fixated on the last target because at that point, I'm just going to give up my money. So sushi, if it comes back down to 180 level, starts to form a base around there, you get some semblance of a bottom, looks something like this, right? Maybe an under-over structure. So you maybe move into the low, get a dip. It's not the first dip usually. Get a second dip that reclaims that. Okay, we have some sign of strength. And guys, this is actually becoming a simple market. People think, wait a second, it's been so difficult for so long, this cannot be that simple. Well, yeah, it's a bull market. People are just aping in things. Okay, you're looking at human behavior on the charts right now, less what you normally would see as manipulative behavior by your, favorite whales or market makers, even though, that whole concept is repeated too often. Ave, we've been sharing that for the last 2 weeks. If you haven't been in this yet, you haven't been paying attention. So DOT. This is one that, I think is offering a clean structure now. Okay, so you have this daily range that was respected for quite some time. Loose, right? Make an aggressive move up. Treating this as support now. I think the DOT is setting up to run. I think the DOT is ultimately coming back up to these highs over here. So the sign of strength within this level, right? You're seeing it right now. So you have this flip right here. So that's a really good flip. It's kind of late right now. I would probably be looking at starting to average in here, to scale into a position with DOT. So long as everything kind of holds up, you could see something like this where you have these prior lows, this prior, this sort of consolidation, excuse me, hitting the wrong tools as I'm trying to do that. You have this sort of consolidation, trying to capture that high, right? Where you do get maybe a pop above, but you base out a little bit. And I think that you get away with kind of scaling into DOT. Honestly, it's beginning to show signs of strength against BTC, which is primarily what you want to see, period, when Bitcoin is showing strength. Rune, it's another really good one that's been really good. I've talked about this since the flip back here. Let's see. There was others that I want to talk about that are not exactly having run much yet. So SNX, I think it's a little bit late behind Aave right now. So SNX had a little bit more violation into a previous structure. So you got this move through, retested the range low, moves up, get a really big violation. But if we look at SNX and Aave, they've been very correlated as of recently. So SNX also moving up against BTC. That's very important. But if you look at SNX and Aave, they were very correlated recently, and now Aave has kind of taken the lead. So I think that, a lot of the times trades do set up like this where you get a little bit of an idea as to where one is going from another. Okay, so the market as a whole right now maintains strength, and SNX, as long as it puts in these microstructural higher lows, is coming up to, at least 620. We're at least testing that high again, and at that point you're probably looking at, around 720 level. So pay attention to SNX, okay? Wi-Fi, same thing, right? Wi-Fi, just another really strong trending asset. I want you guys to share charts though, because I made this list a few hours ago, and a lot of these have already, we do the stream, and I'm not looking at the chart. A lot of these are already moving up. I'm like looking back at them like, oh, that one's kind of in the past now. Oh, that one's, that one's kind of behind us now. Shit. So let's get to a different chart, and then let's get your let's get your pairs. Right, I'll add them to this platform. BTC so this is looking awesome. So I could get lost in the stream sometimes, but this is looking like it only wants to go one direction. Only wants to go one direction. And now I would say, like, just look for this level. Trend lines, don't get lost in like specifically where it taps. You're looking to capture a progression, right? A progression through time. And it's really just a series of higher lows being forced into a pocket of one equal sort of resistance. So this, with the funding rates being neutral, let's look at Delta really quick on the lower time frame. I'll just go to a 5-minute chart just to make it easy. So let's look at Delta. So this is BitMEX. Just want to look into these lows. I want to look into their soul. Where is it? Okay, so this is good, right? So you have relatively equal lows. Look at this. So look at this structure as it curls up, and it's kind of flat over here. So you don't have aggressiveness in terms of buying activity. It's just floating. And you have that movement down in terms of CVD. But let's see, Bybit is really starting to take over. So I want to see this. Let's see how this shapes up. Oh, that is money. All right, so look at these lows right here, and then look at Delta. All right, so you get the gist. You see what I'm trying to paint here. There is absorption higher up this time than there was prior. Right, if we zoom out. Right, so now you have absorption that is suddenly catching this higher and higher up. There's a sense, it looks like there's a sense of urgency right now to bid this up. So looking really good. Okay. Yeah, I think that, so Sweet Canary, I think like things like DOT. Yeah, so Sweet Canary, by all means, like, I try to err on the side of caution on the streams. Do I think that DOT is a good hold in terms of a bull market? 100%. 100%. Yeah. So ETH, I think, is a higher beta BTC. I think it's probably going to outperform Bitcoin in percentage terms, but be more volatile. Okay. If something is going to ask about a chart that has nothing, the answer is more down. Yeah, that's the thing, X Factor. Like, if I see charts, guys, and you're sharing charts, and I don't, if you see that I look over them, or if you notice that I'm not mentioning your chart, so like, let's look at XTZ, because I think XTZ might be, for the first time, again, looking somewhat decent. So let's see, XTZ, let's look at it against Bitcoin, because it's been dead for a while. I need to see that it's looking decent now against Bitcoin. So in terms of recent, let's get the Bitfinex shit off. And then I'm going to go over how to spot an iceberg, because we want to have a little bit of a lesson. Okay, so where's the, oh, sorry. All right, so against, this is fine. All right, so against BTC, it's starting to flatten out. So that's good. It's not, you know, it's beginning to flatten out. We know that this can continue just down like that, but it's at least flattening out for the last few days. That's a good sign, right? It's starting to find some footing against Bitcoin, which is all you're doing when you're having that sort of numerator denominator set up with against Bitcoin instead of against USD, is you're seeing which is out, you know, is Bitcoin outperforming? So if we look at this actually right now, where are we in terms of major support and resistance zone? Well, if we just connect this from prior levels past, so you see that there's a general area of confluence right in this general area, right? Support zone, lost it and retest it. So this line is, it does hold some merit, right? There is some merit to this line, but more specifically, in terms of local structure, if we extend this moving forward, if we're going to start treating this as support, right, what we did is we made a low. Let me back out one sec. We made an attempt to trend further down, so break outside of this structure, retest it, make an attempt at a new low, and now we could potentially have a higher low in the making, right? And then what you have is this area was tested before, this little gap. So we've already kind of nuked through that and come back. So now if you're reapproaching that level, same concept as in market profile, right? When I see that we have a single print structure, if we look at, let's say, just the profile, and we look at this tail, this excess down here, this is telling me that buyers stepped in. So this did its job, right? Market came into this level, wasn't accepted. It should have done its job. We don't want to see it repeatedly revisited. Otherwise, it's probably going to break. So this was rejected at the highs. You have these little tails. They're not really tails. They're just selling. They are selling tails. They're not excess, really. But, you know, you reapproach those levels, and that buyer, that seller, they might not still want to be stepping in. They might be done. So the same thing with Tezos. You know, you make a strong platform up here now above this high. This happened, but is it likely to happen again? I don't know. The rest of the market's turning. You know, we see this rotation that occurs. Tezos actually looking like it could be setting up decently. I don't know about Aave going into price discovery before BTC would have a pullback. I don't really try to think too much on stuff like that. Okay, so let's talk about an iceberg. We're about an hour and a half into this. So what is an iceberg, right? You can hide your orders, right? So if we go on to, let's pull up the ladder from the CME. So if we pull up the ladder from the CME, I'll just clear some of this activity. Looks like my niece has just arrived back from school, because now we drop her off and then have to pick her up. Not pick her up. Well, my wife picks her up sometimes, but sometimes she'll get dropped off back here, and then it's the struggles of having their parents. We don't get the boys, but my niece now, we have two. Well, one of the nieces doesn't need us anymore to drop her off at school. It's only for, we'll dox her. Her name's Harley. Clearing this volume. Sounds like they just got back. But so what you're looking at right now, this is the DOM, right? This is a ladder. So what this is showing is the bids, okay, on the CME and the offers, right? So you're seeing how much looks to be passively sold, how much looks to be passively bought. What you're going to see pop up is buys and sells, right? So you're going to see recent ask volume, recent bid volume. So you'll see, for example, you know, there's two in the bid right now, two in the nearest bid, two in the nearest bid below that, 37, 47 to buy, above 4 to sell, 7 to sell, 118 to sell. And there was just one lot sold, one contract sold into the bid, another contract sold into the bid, okay? So you see that there is activity, aggressive activity taking place at the bid, aggressive activity taking place at the offer. I could see over time how much this adds up. What this is, it turns into a footprint, right? You look at the DOM, you look at a footprint next to it, this is painting the footprint. Now, over time, it's going to create what is kind of like a volume profile, because I have the current ask volume total, the current bid volume total. So this will show me over time, right, what has transpired, and you can imagine this might be useful if I'm looking at something like an important level, right? So I reset this, we're at an important level, and I see, oh, okay, we've been at that resistance, and oh shit, you know, we see a ton of volume at, let's imagine that, let's make it a little bit more realistic. We see, oh, this has been a ton of buying volume up here, it's all green, there's not much aggressive selling. All that buying volume is at resistance, price is now moving lower. Okay, those are, you know, that's clearly a wall up there, it's trapping us, right? So you're gonna see this add up with that activity. This is not something all of you can have access to, so I don't want to get too far into that. But if you look at any exchange, right, if we go to, I haven't been on Binance in a while, let's go on Binance. So if you look at your DOM, right, you look at your DOM, right, we'll go to Binance, we'll go to the advanced, even though it's not advanced DOM, right? So here's your ladder, okay? So certain exchanges allow you to use hidden orders, right? Allow you to use icebergs. You could use an API to integrate this as well. And what you're doing is you're only exposing, it's like the tip of an iceberg. You're only exposing a little bit of that order, okay? So what it could be is, it could be something like, we'll use this because this actually has the, I have the ladder on the side. So not this one, I gotta go to 0. I change these hotkeys around. So what we're seeing on the right-hand side is we're seeing, this is the best way to see it, honestly one of the best ways, is to have a footprint next to the DOM. So we're seeing there's 4 million in the bid right now. So I will also always have this up. So if you can see this right here. So I'm going to scale this so it fits. Okay, so here I'm going to scale this. The tape, I like to have an aggregated tape. I like to know what kind of activity is taking place in other markets as well. So we can see there's, let's just talk like this is going to stay here, right? So 4 million, okay, 4 million at the bid, you know, now it's switched. If I talk about this, it's going to change, so I'm going to draw it out, right? So I'm going to, let's make a white page and get rid of this, and we'll draw it on this margin right here and keep this as a tape. All right, so let's draw a DOM, right? So this is the DOM, and here is, let's make it properly color coordinated. So here's your DOM, right? Here's the price line. Let's imagine this is the current price. Current price is right here, so current price. All right, here is the nearest, let's make it the right color. Let's go with red. So here's the nearest offer. There's a bunch of little offers right here. All right. Here's a big offer up here. It's a big offer. I have like a thing where I'm just going to try to keep, I know I'm going to try to keep these roughly similar looking in terms of height, but that's stupid. So let's say that there is, you know, 200K here. You know, 200K here. Okay, you get the idea, and then up here is like 5 mil. Okay, so 200K right in the first offer. Okay, and then below, all right, maybe you get a big bid. So you get a big bid. Looks like a big bid, right? Looks like someone's trying to pick up a lot. You get a bunch of big bids. The market looks strong, and you can see how the DOM, it fluctuates, and it's going to be spoofing and giving the impression of strength often. You can't really just look at a DOM and get an idea of where the market's going to go. You know, if a market was purely random and stochastic in nature, then yeah, if the market depth remained skewed to the bid side or to the ask side, if you assume a randomness in orders, yeah, the one that would get depleted faster and lead to directional movement would be the smaller one, right? So if you always had it as the case where there was more in the bid than there is in the ask, and you threw orders randomly at that book, price would go up, right? Because random orders would deplete the asks more because there was less on the ask over time. So you'd see prices rise, but we know that that's not the case. So let's say now we have 2 mil here. We have another 2 mil here. We have another 2 mil here. So here's your ladder, okay? Point in time. So this doesn't look like a big order to sell, right? But an iceberg only shows you the tip of the iceberg. So how do you validate that this is an iceberg? Well, you can look at this. Let's imagine that this is the tape on Bybit, okay? So this order can keep refreshing, and that's what will happen. It's hiding what is behind it. So the tip of the iceberg is, here's the waterline, here's the iceberg, but there's a massive portion of it underneath, right? You don't want to take it for granted that there's a little tip that's showing. So if this is the tape on, let's imagine Bybit, okay, or Phemex or Binance or whatever, this is the nearest offer. One thing you could do is you could see that, hey, at this current price, let's say that this price is, you know, this current price right here is, let's just keep it easy round number, 20K. So what you can look at is, what you can see is, when you spot this, is there will be an excess amount of orders hitting 20K, buying it aggressively, that exceed that volume, right? So there's only 20K that's looking, that it's available on the offer, right, on the ask. But I just got the apple cider vinegar portion that was settled at the bottom. Whoa. So at the 20K level, you see 20K is being hit, right, or right here. But we've gone through like 2 million contracts and it's still 20K. That doesn't make any sense, okay? That's if you look at a tape. So you see that at that price point, it stayed that small value, but there's been more that's actually been transacted there. That's one way to spot it. The other way that's actually very useful when you're using something like XO is, if you see, you zoom in, you see, okay, so right here, very limited amount on the bid. So 600, 700, 1 million. If you see that at this level, that at the bid side on the footprint, that there's 2 million contracts, 3 million contracts, I'm going with large values to make it extreme so it's obvious. If you see that all of that volume is transacted there, but the order there stays a small order, how did that volume get transacted there and not move the price down if the order there was only, 100K to buy and we transacted 1 million at that level? Okay, that is a sign that there's an iceberg, right? There is a sign that there is a hidden order that's actually sitting below that advertised bid, all right? And this can be really useful. If you see this adding up over time, that's another form of the heavier hand, right? This is a lower time frame way of looking at that fucked my throat up. This is a lower time frame way of looking at what you look at when you're looking at a CVD divergence over time, right? The heavier hand. Well, the sooner that you could spot the heavier hand, the better you might, the better position you might be able to put yourself in, because all right, so that person's playing with some firepower, all right? If the market is not moving through it, just more of an idea of, hey, where's the market trying to go? Is it doing a good job of getting there? No, it's not doing a good job of getting there. Okay, what really makes this trade valuable? What's the positioning like at that level? Oh, we have 10 million contracts into that level. Now price is trading 10 ticks below. Okay, let's tag on a short. This guy is probably going to puke. This is going to give me like a $70, $100 rotation in and out. So that's how you spot. That's one of the ways you can spot an iceberg. You see that a certain amount is offered, or a certain amount is in the bid, and there's been more volume that's actually transacted at that amount. Because normally, let's say there's let's say that this entire ladder right here between 25 and 75 is offering 2 million. It's more than that clearly, but let's say it's offering 5 million. If I market by 10 million, I'm taking all of that away, right? If that is the actual amount offered, that's going to be gone. I'm going to buy that portion of the book, and we're going to move up to the next area of depth. So if it doesn't move, that's if you got a 1 million sitting at the offer right here, and you see 20 million transacted, against it, and you're like, wait a second, price didn't go anywhere, and there's still only that amount there. That doesn't make any sense. You change your mind at that point if you're still long in the short term, right? So things to be mindful of. But I think that's gonna wrap it up, guys. I tried to keep this as educational as possible, right? And give you an idea as to what I think about Bitcoin in the near term. Didn't want to make this a messy cash tag thing. Not gonna go through and chart everything. I took a few charts, but Wednesdays are going to be like this. So if you like this kind of stuff where we go over specifics, right, things that really give you an idea of how to operate in the jungle that is the market, then this will be a good stream for you to turn into. Let's look at Uni though, because I know I at one point was interested in that, and you guys have mentioned that a few times. So I will appease somebody and look at Uni. Not playing this game again. Uni and Comp. I was getting in them thinking they would follow faster, but this daily level right here is still doing its job, right? So that daily level, still doing its job. We don't have anything yet. You have to be, for me, Uni now has to be forming support above here, and I don't care if I'm late to the party. So, but that's that, guys. It's been a good stream. I hope you all have a fantastic day. All right, I will see you on Friday. Friday, we got to figure out a theme, right? You got to figure out a Friday, It's Friday going into the weekend, so it'll be hopefully a bit. We'll keep things light. We'll go do more of the charts. And talk about going into the weekend because weekends are thinner and yeah, that's that. Everyone have a fantastic day. I will talk to you all soon.